finally, would be great to discuss gastroenterology. So I'll turn that back over to the team for some general market commentary.
Great. Thanks, Zach. Yeah, I think GI, if we look at the gastroenterology specialty as a whole, again, another one where you've had third-party investment, you had the formation of large platform groups for quite some time, not as early as perhaps your dental and derm, but we really started to see the first formation of these starting in kind of mid to late 2000. So you had 2016, you had Audax, which entered into and made an investment in GastroHealth out of the Florida market, which created a platform that then over the next 2 to 3 years expanded significantly beyond the Florida market. 2018, you had WAD and formerly what was Texas Digestive Disease Consultants that formed GI Alliance. Again, a group that's been highly acquisitive and significant growth story since their formation. Both of those large platforms there are kind of on their second roll at this point in time. You had Audax, who's now sold out to Omer's there with GastroHealth, and then there in most recently in 2021, late 2021, WAD exited their GI Alliance, which that one was a little bit interesting because it was more of a physician-led buyout, utilizing kind of hybrid debt capital from Apollo in funding that investment. But both of those at extraordinarily, what we thought at the time was kind of shockingly high multiples, up in the upper teens. And so, I think just as it relates to overall valuation for GI, again, I think these groups have seen, and their subsequent buyers have seen, that it is, it's highly fragmented, and these groups, there is a significant ability to advance scale there quite rapidly. And generally, what we've seen for GI, it's not as historically entrepreneurial as you've seen in perhaps some other specialties as well. So these groups coming in and offering their, opportunity to expand ancillary, opportunity to be part of a significant growth strategy where they can show historically that they've unleashed significant equity value, rollover equity value to the groups that have participated with them historically, I think is highly attractive. GI as a whole, the specialty, it's again, this specialty, high number of ancillaries, some of which most groups have captured some, but not all. But you've got pathology, you've got infusion services. Certainly quite a few of them will have anesthesia, led by typically CRNAs as part of their outpatient surgery centers. So they'll have employed CRNA groups that'll provide services and anesthesia services to their outpatient surgery centers. Some imaging, then you've got more of the retail, like, nutrition and weight management that's incorporated as well. Again, another specialty where most of these groups have significant investments in typically single specialty ASCs, sometimes multi-specialty ASCs. So I think we have seen some groups come in, our dealings with them where, perhaps they acquire a platform group, and the platform, the PE backers, thought that they would have an enhanced ability to capture more of the ancillary ambulatory surgery center income stream, and been faced with a little bit of challenges there just due to the non-compete issues and the fact that as opposed to owning unique aspect of ambulatory surgery is most of the time you have the physicians who are owning directly independently as opposed to through a group setting, and most of that historically for compliance purposes. But that inability to kind of unleash some of the ambulatory surgery center ancillary income, I think, has created some challenges. So a majority of the growth that we've seen is kind of through traditional buy and build. So just enhancing scale, leveraging, multiple arbitrage of acquiring practices for lower multiples, and then experiencing very high multiples on the platform side. So again, a market that we've seen to continue to be very active, and we'd expect it to continue to be active moving forward.
Thanks, Kevin. From the real estate perspective, some of the PE activity that you mentioned, the platform roll up in the GI space drives some real estate fair market value and compliance issues around lease rates. You see a lot of physician-owned GI centers, whether ownership is going to be maintained by the physicians, or whether a third-party real estate investment entity separate from the OpCo PE platform is going to come into an ownership role in the real estate. And depending upon some of those structural considerations, you might need to vet whether the post-transaction lease rate is going to be adjusted. That, of course, can impact the operational cash flows and the price paid for the business entity. From a sticks and bricks perspective, gastro centers are, again, more valuable typically than normal medical office space. Build-out requirements not at the highest end of the ASC spectrum, but you do have surgical space, the need for anesthesia services, and high growth sector with a lot of smaller size transactions from a real estate perspective. So to kind of wrap up our specialties, gastro, is another one of these that's somewhere in this, from a real estate perspective, in this gray area between the highest end of ASC build out and high-end medical office typically from a value and lease rate perspective. Clint?
Fantastic. Thank you, Victor. Yeah, so we would echo the same sentiments that both Victor, Kevin, and John had. So, really in the gastroenterology space, somewhat akin to urology in a sense for the size and scale of practices in any one MSA. You have very much a aggregation of providers within the group, and typically a larger concentrated single tenant net lease scenario for the practice with a dual blend of clinic and ASC aspect to the practice. One that has been a space of focus for us, and quite frankly is going to be coveted for years to come in the institutional acquisition candidate world. Gastro GI is always a very good specialization, and one of which that has scale and will continue to scale. So any one dominant GI practice in an X municipality will typically be very highly sought after, and really from a secondary and tertiary market perspective as well. These are specializations that tend to draw from a very large catchment basin and very, very high level of care for their patients. And with that, that will conclude our specialization side of the conversation.